The Crotchety Old Men podcast is not a registered investment, legal, or tax advisor or a broker-dealer. All investment financial opinions expressed by or on the Crotchety Old Men podcast are from the personal research and experience of the owner of the site and are intended as educational material. Although best efforts are made to ensure that all information is accurate and up to date, occasionally unintended errors and misprints may occur. Before you invest or make any investment-based decisions, consider your own personal circumstances. You should do your own research and seek advice from a financial professional.
Well, hello again for another week of the Crotchety Old Men podcast. Hi, I'm Gary. I'm one of the hosts of the Crotchety Old Men, and it gives me great pleasure to share with you who's in the studio today. My main partner, George Crumley. Ha 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 ha. Top of the day to you, George.
Top of the day to you, Smitty. How you doing?
Hey man, I'm doing great. Life is good.
Yeah, we're just trying to beat this heat. Other than that, everything's good. No complaints at all. And as usual, I get so excited. Anytime we have a new episode of the Crotchety Old Man podcast because we've had so many exciting guests and so many guests that give us so much information that we can share with our audience. Fulfilling those pillars of educating, exposing, giving our audience an opportunity. So today's no different.
Amen to that. I'm excited. Just reading the bio, and I don't, me, if I talk too long, I'll talk too much. So I'm going to pass the mic back over to you before I spill the beans.
All right, sounds good. Well, today we have the pleasure of having Alex Davis on. She's a CPA and a CFP, and she's here to talk to us about some of the things that we kind of hit on a lot of time about taxes and financial planning. So we've got that expert on today who's certified in these fields. So, Alex, welcome to the program.
Thank you so much for having me on today.
Well, to start off with the audience, can you kind of talk about your background? Tell them a little bit about yourself, and tell us did accounting? Did you choose accounting, or did accounting choose you?
I definitely chose accounting. So, hi everyone. I'm Alex Davis. As these handsome gentlemen just mentioned, I'm a CPA and certified financial planner. I am the owner and founder of AGA Tax and Consulting Services. I've spent over a decade in public accounting, working with mainly small business owners and high net worth individuals. And then in 2021, I decided to take my talents to myself and my family. And that's when I launched my AGA Tax and Consulting Services. And the goal there is to truly serve other entrepreneurs in building wealth through strategic tax planning, but also changing their relationship with money. I just know with my personal experience, money and finances sometimes can be a bit of a stressful topic. And I pride myself on really making it approachable and fun, but also informative.
Well, that's good. I mean, we're with those types of credentials, we know you have a lot of information to share with our audience. But let's talk about your personal experience. Reading your bio, it seems like you had a large sum of debt, and talk to our audience about how you came out of that debt and kind of where you are today.
Sure, absolutely. So and back to accounting. So I actually when I graduated high school, I wanted to be a psychology major and minor in Spanish, but I was a single mom, and so I needed in my mind to pick a career where I could make money quicker than 8 years, but then also it's reliable. With accounting, no matter what, you will always have a job, in my opinion. And so in choosing accounting, I went through 4 years. Well, actually, to become a CPA, you have to do 5 years. And so I obtained my CPA license. But by that time, being a mom and all that, I had accumulated about $40,000 of debt. Fast forward to not paying any of the debt for several years after college, it ballooned to 50,000 with all the interest and everything. But I finally decided that I wanted to stop running from it, and I wanted to make some additional investments in like buying a home and things like that. So I had to take charge of it and actually start paying it off. And I just leveraged my income. I made it a point to invest in myself in during my career to make sure that I was continuing to be promoted within my job and created a plan to actually start paying it back.
Yeah, that's great because it's important, not only to kind of talk the talk, but walk the walk. And in doing other folks, financial planning, it's good that you have a story, whereas didn't start with all of the golden accolades, but you came and had to dig yourself out of a hole, and now you can use that as a method of helping other people get to the same thing. So yeah, that's a great story. So let's kind of swift uh, change gears a little bit and talk about certified public accountant and how you've been helping folks in that field.
Yes. So what I want to say is getting an accounting degree when you're in school, an accounting degree does not automatically lead to a CPA license. So getting your CPA, like I mentioned earlier, you have to take an extra year of school, at least in the state of Florida. You take an extra year of school, and then you have to pass a pretty rigorous 4-part exam. And so what I knew is if I'm going to be an accountant, I want to be the most highly recognized accountant. And in my field, that's the CPA, Certified Public Accountant. And so um, I use that because it's recognized. There's so much respect, just a certain level of respect that you put on a CPA's name. And so I wanted that. And then also the knowledge base to be able to serve my clients. And I specifically spent my time in tax. So I've never been an auditor or anything like that. And so I think sometimes there's some confusion when you say CPA, a lot of times you automatically think tax, but their CPA is just a license, it's a designation, it's not necessarily a service. So you can just, it's so broad. And so I use my CPA and my specialty to truly help identify how to save the most on taxes, but also be legally compliant. Because I think a lot of time what I see with my clients is they've been doing things a certain way, but maybe they weren't working with the proper professionals. So it's not correct. And so if you're ever go under audit, you could be in trouble. And so I truly like to use my license to educate and make sure that you're following the rules, but also you're not overpaying in taxes. But you need to know what to do and why you're doing it to make sure you're doing things the correct.
Absolutely. I'm glad you mentioned that in terms of taxes. And I relate that a lot to real estate, and it comes to property taxes, and so when you look at how you acquire property, and same way with paying business taxes, because I know in your bio you speak terms that you do a lot of work in the business community, and that's so good because so often our entrepreneurs, as we all know, it's not how much you make it, but it's how much you keep. And having a CPA on your team, that's why you may be a sole proprietor, but you're not a sole provider when it comes to a business because you got to do it with a team. You got to have people like you, a CPA, and your legal counsel and that and so on and so forth. Got a question for you, Alex, and that when it comes to depreciation, this is a question I've been just anxious to ask for businesses now that a lot of businesses are now people are working from home in their businesses, and I know there's when I've heard a lot about cost segregation, how is that you can use things that are not attached to a building, what have you. How does that law, if you will, or compliance, if you does that carry over to a home-based business, and you have depreciable items in my mind like your desk, computer, chair? Can you take those things as deductions, or could you speak on that, please?
Absolutely. So the answer is yes and no. So you can definitely take some expenses for what's called a home office deduction if you're a home-based business, but that may or may not be your best approach because you could also, I may get a little technical, but there's also a simplified method, or you can take like a percentage of your actual expenses. And so the only, I would say, drawback against taking your actual expenses is that when you go to sell the home, you may have to recapture some of the depreciation and then pay tax on it. So that's something to consider when you're taking these deductions. And then you just want, and then also the record keeping of it. So sometimes you want to what you want to do is make sure that you are weighing the cost of taking your actual expenses or the simplified method. But you can absolutely do the cost segregation is an excellent way to maximize your deductions for sure, and you can definitely do that in with the home based business. But like I said, that recapture is something that you want to pay attention to. And then I also wanted to touch on something that you said about having a CPA on your team. A CPA is great if they are experienced in what you are working on. So you mentioned real estate. You want to make sure you're working with a CPA who specializes in real estate, because if they've never really dealt with the real estate and that's not their zone of genius, they may not be able to think of and consider all the tax credits and deductions that someone who like eats, sleeps, and breathes real estate or has a lot of experience in it. So that is definitely something I would.
Powerful. Go ahead. Oh my goodness. I hope people in the back are listening to this young lady and taking notes. Good thing we're recording it so you won't have any excuse for not knowing the truth. All right, George, I'm sorry.
No, you're good. I always like to make sure our audience understands, where our guest is coming from. So, and one of the questions that, we always talk about on the program is the difference. Alex is a CPA and a CFP. But Alex, kind of to help our audience, because sometimes when people go to H&R Block, they think they're getting the same slice. So let's talk about the difference between a CPA, a financial planner, and a tax preparer, because I think that's very important for our audience to understand. Based on where they are with their investments, with their business, and what they really need to help them. Because I'm a strong component of make sure you get the professional help you need.
Yes, it is. It is so important. I've seen some horror stories because just not having the right professional support. And so typically at H&R Block, they are tax preparers, and you can take an exam on the IRS. It may not even be an exam. This you can register and pay like a $40-$50 fee to become a tax preparer. They don't require any sort of continuing education. It's literally just paying your fee each year. And then they may offer some training on tax prep, but it's truly just to get the tax return filed. Typically, they are not doing any planning. They may not even really question your documents or identify what things you need to do to support the deductions that you're taking or anything like that. They're purely almost data entry at when I think of a tax preparer. That's what they're typically doing, as opposed to a CPA that specializes in tax. So you could be a CPA, but you do audit work. And if you are an auditor, they have no typically idea about tax returns. But if you are a CPA and a tax professional, you are not only preparing the tax return, but typically you are also identifying, are we maximizing deductions? You're actually making sure that you're following the IRS tax code to make sure that these deductions are correct, and things like that, and doing some tax planning. But I will say this, sometimes even you hire a CPA, and especially in this climate where there is a shortage in CPAs, there just is. They're retiring and new students are not coming in to take in the profession, or people are leaving. And what's happening is the CPAs are inundated and they're busy. And so even though you've hired them and with the thought that you're getting tax planning and things like that, they may not be doing that. So you want to make sure that you're actually having conversations with your CPA and making sure that they are actually offering tax planning type services. But with the CPA, in addition, they have a college degree. They at least have a bachelor's degree. So that's at least 4 years of college. And to become a CPA, you have to take additional classes while in college to be qualified to even sit for your CPA exam. Then you sit for a very rigorous 4-part exam, which you have to pass in a certain amount of time. And then you have to take at least 80 hours in the state of Florida, take at least 80 hours every 2 years of continuing education that is tracked. And so that's the CPA. And then with the certified financial planner, you same thing, 4-year degree, and you take an exam. It's not as, I would say it's not as rigorous as the CPA. CFPs don't beat me up about this, but I felt like the CPA exam was a little bit more challenging. But then you still have to sit for an exam, and you're looking at 6 core topics in financial planning that you have to be well versed in to pass this exam. And then again, you have continuing education with the CFP.
So, when do you think an individual needs to consult with a certified public financial planner?
I recommend having a CFP, a certified financial planner, when you're really looking for a holistic approach and it's not just about taxes. So when you're looking at, and quite frankly, I would say if you have assets, it's great to work with a financial planner just to get a feel for where you need to go for the future to reach your long-term goals. Financial planners are really about supporting you in reaching your long-term goals. And so when you have assets or financial goals and you're looking for a bird's eye view, some support to make sure that you are on the right track, that's when you really want to get with a financial planner, in my opinion.
So, a part of that financial planning is also tax preparation or trying to determine, what's the tax advantages, because like Smitty said earlier, it's not what you make, it's what you get to keep. And I think as both of us are finding out, during our retirement years, that you still have to pay taxes. And I've been doing some investigations and reading more and more, and it's really I'm gonna say somewhat complicated as far as understanding how you need to take certain funds out of certain accounts. You've got certain accounts. We talked last week about whole life insurance, how it's a tax free investment. We talked about also investments like your 401k, which is a deferred tax type of situation. So, do your studies or your consultations go into the mix of the different types of investments and why?
I I personally don't dive into investments where as it relates to the stock market, but I take the a high level holistic approach to is it in alignment with your particular goals? But I let the experts in investing handle the investing. But as far as with the CFP, yes, they will consider the tax implications of it because I mean you have to. We're doing a lot of predictions when we're planning out for long term. So oftentimes it's running scenarios, worst case scenarios, best case scenarios. None of us have a crystal ball of what the future looks like, but it's definitely something that you want to make sure that you are considering as we're mapping out these plans. So most CFPs are definitely looking at the income tax implications. They're not preparing any tax returns typically, but they are considering that, and they're considering insurance, as you mentioned, when you mentioned whole life insurance, they're considering that. They're looking at estate planning. How do you want your assets to be distributed, after your passing? Are you protecting your assets during life and in death? So they're really looking at so many different areas. It's a really holistic approach with CFPs.
Alex, it seems like the two careers of CPA and CFP have moments or times when they blend together, where one needs to know what the other does and the other and vice versa. Because I can see here just sitting listening while a CFP obviously is going to do their analysis where you are, where you've been, and where you're trying to get to, and how to help you get there. And then I look at in how the country is today in terms of economics of home ownership versus a lot more people are renting. And you typically, when you think of renters, you think of apartments, but that's now no longer the case anymore, since you have a lot of developers build to rent. And where I'm going here is kind of piggybacking on a question that you answered for us previously. And I didn't consider it until you start talking about the CPA, and I'm thinking about how they have to go through and be able to, at least while they don't prepare tax returns, they certainly had to be privy to certain tax laws, I would think. And where I'm going with that is this: so if a person rents a house instead of an apartment, I mean rents a home and doesn't own that property, so they're not going to be selling that property as far as that recapture on that depreciation again. I'm wondering what impact would that have on that type of situation where you have a bigger space and with a CPA, not CPA, with a certified financial planner be astute enough to pick up on that and refer them to a CPA. Does that make sense? Am I making sense here?
Yeah. What I would say is typically a professional, if they are not experienced in an area, they will refer out. So most CFPs, if they know that they know enough to be dangerous, but because they don't practice in and day out, they will refer it out. Because yes, to your point, if you're renting it, you would, well, technically you wouldn't be able to take the depreciation expense to begin with, because that's the depreciation is only allowed if you own the property in that case. But yeah, typically most professionals will go ahead and refer it out. But they, like I said, they know enough to give you recommendations and map out your plans and that part.
Thank
So
you.
let's kind of hammer this one home. So let's talk about some of the deductions that W-2 employees, because that's one of the things that you're single, you haven't bought that house yet, you're getting hammered with taxes. What's some advice you give to those folks?
Start a business. The IRS code favors business owners and investors. There there are very limited amount of deductions that you can really take as a W-2 employee. So I say if you can afford it, max out your retirement. Identify if, and working with a financial planner as a W-2 employee, you can really look at some retirement planning options to identify if Roth IRA type of or Roth 401k is your better approach, or like a traditional 401k is your approach. And the reason I mention that is because if you expect that your income will be higher in retirement, like your total overall income, a Roth IRA may be your better investment, because when your income is higher in retirement and you withdrawing from your Roth, now you're not taxed on that amount. Now, if the reverse is true, which quite frankly is often the case, in retirement, your income is not as high as when you're working, it may be more beneficial to take a traditional approach with making your investments in like a traditional 401k, a traditional IRA, because you're getting your tax deduction now when your income is highest and then your highest brackets, as opposed to in retirement. However, like I said, none of us have a crystal ball, but working with a financial planner, they can run these scenarios. You can have these conversations. You can consider estimates. So that way, when you're making your investments in these retirement plans, it's coming from a place of being educated, as opposed to, okay, well, these are my options. This is what I did. And so that's also a case where with employees, especially if you're generating a significant amount of income, you want to make sure you know what you're doing with your money, but why you're doing it, making sure that there's a bit of a plan behind it, so you don't get into retirement and then you're surprised type of thing. Uh, oh my goodness. And then you have to give me the rest of the question, because I just
No,
started talking and I may have got
you're doing
lost.
fine, because the question I asked, you answered it, exactly. It's almost like I baited you to answer that, but it was start a business. And because that's one of the things that we talk on the crotchety old men about all the time, is if you start any kind of business, start a business, because the tax code was written for businesses, not for individuals. And if you're an individual, you're going to get slammed with taxes. So it's very important that that's one of our models, is pay minimal taxes, pay no fees. We try to explain to people, all these fees that people charge you, all these taxes, you've got to figure out, you've got to not understand the tax code, but you got to go to professionals that do understand the tax code, so that you can take advantage of it, because that's what everybody else is doing, taking advantage of the tax code. If not, you're just giving your money to Uncle Sam. That's all you're doing. So, I mean, you've got a wealth of knowledge, and I mean, we could go on and on,
Yeah.
just question after question, because this kind of stuff obviously fascinates us, because of the fact that here again, people miss it. They just don't understand that when they get their check every week or every other week, how Uncle Sam is just taking so much from them. And the benefits, like you say, the 401k, the company matches, making sure that you're taking advantage of that, making sure you're starting a Roth on the side, it's going to help you in the future. And here again, talking about the whole life insurance policy. So, I mean, you really kind of hammered home what we talk about all the time. So I really appreciate that. So we just to kind of here again hammer it home. So if you have your business, what kind of just give us some really quick points on some of the things that we need to look for if you do have a business.
Sure thing. So if you have a business, you want to make sure that you are maximizing your deduction. So if it's necessary and ordinary in your business, you can take the deduction and just make sure you're documenting. I think some misses that I see personally when I'm preparing tax returns is um, business miles. So if you're traveling and driving your car for a business, make sure you're tracking that. That ends up being a huge deduction. I think it might be like maybe 62.5 cents right now. Don't quote me on that, but it's at least 60 cents per mile that you can be getting. Just want to make sure you're tracking it. Health insurance, that's another area where I find sometimes gets misreported because sometimes they're reporting it as a itemized deduction, but no, that's actually that completely offsets your income and reduces your overall income. So you want to make sure that if you have health insurance, that you're picking that up on your tax return. Depreciation was another big one, that when you're purchasing assets, making sure that depreciation is being taken, but being strategic about it, because this is the other thing as business owners we have to be mindful of, especially if you are looking to get financing and leverage other people's money. You want to be careful about taking every expense under the sun. So you may, even though you can take 100% or 90% or 80% depreciation, maybe consider stretching that out and opting to take the depreciation over a longer period of time. So that way your income isn't reduced so drastically to where banks don't want to lend to you. So while it is great to make sure you're taking deductions and not overpaying, you want to also keep in mind, like, what are some of your long-term goals, or what are some of your goals over the next 2 or 3 years to make sure that your tax return is going to allow for you to accomplish those goals. Some retirement accounts. As business owners, we want to make sure we are contributing to retirement. And that's now, granted, I have no idea if Social Security is going to be around when I go to retire. I don't know. But when you are not, as a business owner, when you are not paying in payroll taxes, the fight, the self-employment taxes type thing, when you go to retire and you are not showing that you had income that was taxed in this area, there will be no Social Security. And so you just want to kind of keep that in mind as we're being strategic with our business. But aside from that, retirement accounts as business owners, especially when you're generating a significant amount of income, there are just so many accounts that we can be flexible with. There's a set plan. There's solo 401ks. There are, if you want to get into defined benefits, though, there are great opportunities to really throw in a lot of money in your retirement account and be strategic about it. There are insurance policies that as business owners we can take advantage of and get tax-free income in retirement. So there are just so many options as business owners to be flexible in accomplishing our long-term goals and building wealth. And just as you're saying, it's getting with a professional that understands it and is having these conversations with you, so that way you don't miss out on some opportunities. I'm sure there's some other things in there, but that's what comes up to me right away.
Oh, that's good. That's excellent information, Alex. Excellent information. Um, and if you might add about the importance of balance sheets, I think from a CFP side of the table equation, I'm sure you probably see a lot of that happen where people's balance sheets are just not balancing, or ways that they can improve it so that it looks better in the eyes of a lender or what have you.
I'm going to hit on one point before we close out the podcast. And one of the things that I always talk about as far as in your portfolio is as annuities. And I see that you had that in your bio. So talk a little bit about, annuities, the benefit, when you should start looking at them, for, long-term, consistent income.
Yes, I did forget to mention that I'm a licensed life insurance agent as well, but um, but yes, I for me as a financial planner, it's always an annuity is always on the table. It depends on what your goals are and really looking at and identifying where you're at and getting the specifics about your situation. A lot of time I see clients when they've maxed out some of the traditional retirement options, they will look to then funding annuities, and also depending on, do you want to just have guaranteed, like how do you want to feel? If you want a less risk, if you're someone who's like, look, I'm risky verse. I want to get into some of these plans where I know exactly what I'm going to get. This is what I want. That annuities may be an option for you to start looking at that. So really, I also identifying, what does your nervous system feel like? How does your nervous system feel? Because if you want something that's a little bit more guaranteed and you're not dealing with the market and worrying about, is it going to crash and now it's gone 50%, that may be an area to look at. So like I said, just it really depends on you and your personal goals, but I believe that annuities are always on the table depending on just depending on you and just getting the proper information to make sure that it works.
Great. Well, obviously, definitely, we want to have you back on. We may just have you back on and just talk about life insurance and those types of options. But great having you on. Speak to our audience and tell them if they want to get in touch with you, what's the best way to do that?
Absolutely. It's been a pleasure. You all are fun. I love these fellas. uh, yes, if you you can definitely check out my website. It's www.agataxservices.com, and then I'm also on social media. Instagram is where I like to hang out, and that's at Alexandria Chanel underscore CPA. And yeah, I'm there. And then be on the lookout. I'm actually launching my course where I share my personal techniques that I use to get out of debt, from over $50,000 of debt to building my net worth of over 300,000. And I'm just excited to share. And so yeah.
Oh wow, yeah, we're definitely gonna have you back on because you've got a lot of information that our audience will love. I mean, it's right in line with, like I said, what we talk about on an ongoing basis, which is providing information, education, exposure, and opportunity. I mean, you talked about a plan, sticking to the plan. You talked about doing the things that are comfortable and allow you to sleep at night. So, I mean, great, really great having you on the day. So, hey, we're gonna close up this podcast, Smitty. What you got for us today?
All right. I got one quick question though for the young
Oh,
lady.
absolutely.
Are you on LinkedIn as well, or did you mention that you're on
I,
LinkedIn?
I am on LinkedIn. I'm not on there as frequently, but it will be under my full name, Alexandria Davis, CPA. But I am
All
on
right.
LinkedIn.
Okay. Good stuff. Good stuff. Well, as always, folks, I got to come up with a quote for the weekly podcast, and it gives me great pleasure to use this one because I think it's very apropos. All right. Preventive accounting is much cheaper than corrective accounting. It's better to hire a CPA and prevent a mistake than to have to hire a CPA to correct a mistake.
You're right on as always, Smitty. You're right on
Yes,
point. And
yes.
as we always say on the Crotchety Old Men, if you didn't know,
Now you
now
know.
you know. Take care. Be blessed.
All right.
Thanks.